Yes, we have seen this movie before. The European Central Bank last hiked interest rates in July 2008 right into a recession. That's why John Taylor, the man you just heard from there, thinks Jean-Claude Trichet is making a huge mistake. It's not like the Eurozone economy is especially healthy right now. Taylor runs the world's biggest currency hedge fund. I wanted to find out what Danny Blanchflower thinks. Danny is a Dartmouth College professor of economics, a leading labor economist, and he was an external member of the Bank of England's interest rate setting Monetary Policy Committee. He's with us on the phone from Sanibel Island. Danny, what do you think? Is Jean-Claude Trichet making a catastrophic error here, warning of an interest rate hike as soon as the next ECB meeting?
Probably, unless inflation really takes off and expectations become embedded, but it doesn't look very likely that that's the case. This feels awfully like the summer of 2008, and I think Taylor was right. The decision then in July to raise was a mistake, and I sat on the Bank of England, and all the talk in 2008, a week before Lehman's, was about inflation. There really is a very weak recovery in a number of those countries in the European area, and that's the last thing they need, an increase in rates. I mean, I was just looking at the data now, 13% unemployment in Ireland and in Greece, and then you're going to start raising rates. It doesn't really look like a sensible response right now.
So,
I think
Danny,
it's a little bit of a surprise.
If he's not making monetary policy for Greece and Ireland, as you point out, who's he making monetary policy for? Germany?
Well, I think that's right. It seems all the way through that this is policy for Germany. I mean, if you look at the data on the recovery, it really is a two-track recovery. Germany and France doing pretty well, and everybody else doing very badly. In a way, it's their worst nightmare. And what you're seeing was an election last week in Ireland, where the Irish are talking about renegotiating, restructuring the loans, and the European, if you like, the ECB's response is the loans aren't to be negotiated, and that's just not realistic. This is really the worst nightmare for the weaker countries.
Danny, we often talk about the ECB having a single mandate fighting inflation, but the truth of the matter is that it has more latitude than most people think. Article 2 of the Maastricht Treaty does allow the ECB to embrace Fed-like objectives, maintaining growth, promoting job creation. Why, given the state of the Eurozone economy, does Trichet not embrace Article 2 and balance inflation against growth and job creation?
Well, he may yet. I mean, we're talking as if they've actually raised rates. They haven't done that. I think he used this. Everyone's jumping on this phrase, strong vigilance. It hasn't happened yet. They need to really take account of this broader perspective. You end up making these very big mistakes. I mean, the UK is classically doing exactly the same thing. There's a battle between the hawks, some people call them the inflation nutters, and everybody else. The broader mandate seems to be pretty important.
But is Jean-Claude Trichet an inflation nutter? Is he going to stick to his inflation guns in spite of what he sees around the Eurozone economy? It would sound like it, given what he said yesterday.
Well, it sounds like it. I mean, the influence has been huge of the Germans, who really care a lot about inflation. But I think it's quite a big deal that Axel Weber has actually resigned as president of the Bundesbank, partly because everyone assumed that he was going to take over, and it appears that he's not. So there's a battle going on within the ECB about, are you really just going to focus on inflation or have a broader remit? And I think it's very hard these days to argue flexibility is a bad thing. I mean, the countries who were inflation targeted, even in the good times, did no better than everybody else. So it looks like having a flexible mandate is important. And the last thing you need is for another big macro mistake, pushing the ECB, pushing the euro area back into recession. So I think John Taylor was absolutely right. This isn't the right time, but maybe he's just saying something and this won't happen. I think that's Europe's best hope. It's about keeping an eye on things and saying if expectations take off, things will change. I mean, that's what Janet Yellen said, and that's a fine thing to say, but for goodness sake, just don't do it.
All right,
say
Danny.
it, don't do it. That's fine. Make sure that wage inflation doesn't take off, but the last thing you need is more taking away more stimulus at a time when these countries are struggling.
Danny, thanks so much for joining us. Danny Blanchflower from Sanibel Island. He's a Dartmouth College professor of economics, and you heard his advice to Jean-Claude Trichet: don't do it.